That's a great question. So, for example, let's say you have, I don't know, $250,000 to invest, and you're going to go out and buy an asset for $250,000. Maybe you leverage it, maybe you buy $1 million investment. That's a small project. And out of that, the cost to do the engineering study is fairly high for a small asset. So, in the case of a small asset, it may not make sense. It makes more sense on larger projects. So if you happen to be investing in a syndication or in a fund, so for example, our Houston storage facility, that's just the hard construction cost on that project alone is about, I don't know, 10, $11 million. Makes sense in a project of that scale to undertake the cost seg study. And even if you've only invested $250,000 in that project, now you're going to get your share of that depreciation. So that it makes it more accessible than if you're just going out and buying, a little, to use the monopoly analogy, the little greenhouse on the corner. The economics may not make as much sense if you're just buying in small assets. It does make more sense to be part of a larger project.